All right, everyone. If you're watching this channel, you probably know me, David Morgan of themorganreport.com, Mario Innecco of Innecco64. Mario, I got a hold of you fairly recently because you did something called that silver's the Achilles heel of the financial system. And it struck a chord with me because years ago I made a video called that silver is the Achilles heel of the entire financial system. And that was a video that was like in my head for like 6 months. I kept thinking about it and thinking about it and thinking about it. And finally, it all came flooding out and I made this video about it. But I want to circle back to you. What inspired you to, come up with such a bold title and such a good subject?
Well, I mean, I have to admit, I've been following you since around 2003 and 4. You had your silverinvestor.com blog, and I've done a lot of reading about history. There's a book on the shelf about Florence, for example, in the Middle Ages. Uh, it was the money of the people, silver, and the elite kept gold, and they controlled both gold and silver. And the other thing that made me do it, yes, probably heard from you and others, that silver is has been money for thousands of years, even and much more prevalent than gold. And there's the old saying as well: gold is the money of king, silver is the money of gentleman. And I have here in my drawer a couple of cigar boxes filled with silver coins from all different countries, four corners of the planet, going back to 200 years. So I think the bankers don't like silver because it's much easier to carry silver around and transact with other people than to use their fiat currency, to use their debit cards, or to use Apple Pay, because with silver they don't get a cut and from every transaction. And also maybe because of the Hunt brothers. Um, I mean, the Fed was so concerned in 1980 that the whole system was coming down that they changed the rules on COMEX. You couldn't buy silver futures, and it collapsed the price and bankrupted the Hunt brothers. They changed the rules of the game, which was unprecedented, and it still is today. The only exchange that has done that recently was the LME. They changed they canceled trades in nickel, I think, a few years ago, uh, because it was going to bring down the whole exchange. So yeah, and also reading about the great crime of 1873 and how silver has been kept suppressed for so long. Yeah, and that's why I think silver's money, and it's the money of the public. And it would be, I think, if silver came back and people got really interested in silver, not just people like us and in the stacking community, yeah, banks wouldn't do as well as they do today.
Well said. Yeah, there's a couple of comments. One is, it reminds me of Animal Farm, one of my favorite books. All animals are created equal, except some animals are more equal than others. And that's the LBMA and the COMEX. I mean, the rules are the rules for everybody. But since we're an association or where what's the exchange is exchange, it's not really government controlled, although there's government overseers. Well, if we need to change the rules, we're more equal than you are, so we will. It also happened in palladium when Ford Motor Company switched from platinum to palladium for the catalytic converter. The palladium market went bonkers, and I was actually in palladium at the time. Got a huge margin call, and I was long. I was going to add to my position. No, that was the first time I learned. I was quite much younger. but I learned that you could get a margin call even if it's working in your favor.
Hmm.
And that is that the rule? I don't know. Anyway, at the top of the market, believe it or not, to own a paper contract, you had to put up twice the cash price. Can you believe that? It was insane. So they've got everybody out of the futures market, just like they did with the silver market. But I digress. Coming back, I have to give credit where credit's due. Chris Duane, I think, was the first one to come up with the idea that silver is the Achilles heel of the financial system. And I think that got in my head. And like I said, I played around with it, made the video. But moving on, I did a tweet this morning about it. But the reason I think that silver is much more important than gold is that its purpose today is imperative for a high-tech society. But before we get there, I'd like to ask you, Mario, do you think that the bankers in 1873 had the foresight to think that silver would be used in an industrial way, or do you think that they just did it because they wanted to go to a monometallic standard where they had more control and that they just wanted to reassert their power and leave the farmers, the miners, the people mostly on the western half of the United States in those days to basically impoverish them? It was not a good thing for the American public when the bankers went to a monometallic standard. What are your thoughts?
Yeah, it's interesting because I met a guy in Zurich last November at a precious metals conference, and I speak to him almost every day now. He's a retired bond fund manager, and he's into silver and gold. And he told me a story of the early 1870s. If you know your history, you know that the Germans beat the French in the Franco-Prussian War, and I didn't know this, and he told me Germany did really well, and they had loads of silver because they won this war, and they decided to just dump it into the market. And yeah, I never heard that, and maybe that's the reason why they went off silver because the Europeans did. But I've also heard stories that the Rothschilds were pushing for the demonetization of silver in the U.S. And I think it's partly by accident, and also they must have thought, well, if we only have gold as money and used as legal tender, or not legal tender really, because gold and silver don't need legal tender laws because they're money. People will accept them, but they thought it would be easier probably to control countries if you go on a gold standard. With silver, it's harder to control the public. So yeah, I think it was a combination of those two things, and yeah, they didn't care about the miners or the farmers in the West. Just like these days, they don't really care about the flyover country, they call it. Even Besant, he said a few weeks ago or a month ago that now they're looking after Main Street, not Wall Street. But yesterday he had a closed door meeting with J.P. Morgan, and then they backed down on firing Powell, and they're going to cut the tariffs for China. So yeah, they always seem to give in to the money aristocracy, if you want to call it, based out of New York and London, I would say still.
I'm a little remiss. I wanted to send you a paper I wanted you to read, but perhaps you have. There is a series of papers by a guy on Gold Eagle named Taglia. I don't know how to pronounce his name. It's Tlaja, something like that. But he has a paper. I've probably read it 6 or 7 times over the last several years. The title of the paper is Gold Standard Equals Fiat in Disguise. And in that paper, he makes a very strong argument that if you tie gold to a even a redeemable paper, and then it becomes unredeemable, but it doesn't have to, that there's nothing to measure it against. There's no counterweight, in other words. And because of that, it eventually gets to, infinity. I mean, and this is what we've watched since 1913. A dollar was worth 100, and now the dollar's lost like 99%. And yet we're still arguing over, the strength of the dollar vis-a-vis other currencies, which it actually is, because as the reserve currency, we're in a dilemma, and we won't go into that. But have you thought, I'd like you to comment on that if you would. Do you think that the argument is that with silver and gold in the system without a fixed exchange of 15 to 1 or 16 to 1, that silver will counterbalance gold's value? So you'd have to measure the value in gold in terms of silver and vice versa. It's really an interesting article. I can find it and send it to you. It's kind of hard to dig out, but I've got a hard copy so I don't lose it. Would you like to comment on that?
Yeah, I haven't read that article, even though I used to go on Gold Eagle years ago quite a bit. But I mean, one thing about having a bimetallic, I don't like to call it system, but people using gold and silver is that it provides more liquidity. Um, and yeah, when I say gold standard, I don't even like to say that that the currency is redeemable in gold. I think more of it as using gold for money and currency. So the redeemable part, that's the bankers talking about that. And maybe it became easier to manipulate gold under mo single monometallic system. But I'm not sure. I have to read the article, his
Yeah.
argument about gold standard promoting really fiat. And I know that the Fed, when it was created in 1913, we still had a gold standard in the U.S. and it was only until 1930 it wasn't until 33 that the U.S. went off a domestic gold standard. So yeah, I haven't really thought about that, but I would say that having gold as money and yeah, would be good. And my argument always is that the way to bring back gold and silver as money is to abolish all legal tender laws, because the only reason a country needs legal tender laws is in case of an emergency, i.e., war. And I think the first U.S. legal tender law was enacted in 1862 during the Civil War. Because if you don't have legal tender laws, the public will use, or the people in the marketplace will use what they feel comfortable with as money. So that's how I see that.
I did a breakdown of silver as the Achilles heel of the financial system. And here's some of the notes that were made. It's not just a precious metal. It's one thing Wall Street cannot fully control, and the one thing that the modern world cannot live without. Would you like to comment on that?
Yeah, I guess the industrial part is very important, and also for war, silver is important for weapons, but it's becoming more and more important for modern technology like solar panels and electronics, everything else. As far as Wall Street, yeah, they can't really control it, even though they control the price right now through the futures. And unfortunately, the general public doesn't have much of a clue about what Wall Street does and the bullion banks do, so they get away with it. But my hope is that people wake up and realize that silver is money. And that's why I've been making my videos since late 2015. But it might seem uphill battle, but I think the more people you wake up, the better it is. It's the only way, really.
Well, that was kind of one of my main points about the video, and that is that, people actually have the power. And, if you think money is power as I do, the way the system runs right now, then if the people got together and bought up, silver, because Wall Street doesn't teach anyone to buy silver. Gold's really establishment. Central banks buy it all the time. Silver, they don't give a fig about. And so if the people did, and it's essential for modern society, then we would actually put power back in our own hands. But that message doesn't seem to get very far, or seems currently that it isn't. So the next bullet point was gold is monetary, silver is both monetary and industrial. It's in EV, solar panels, semiconductors, 5G, AI, and missile systems. The world could limp along without gold. Without silver, tech collapses. We've already covered that. The next bullet point was we consume silver, it gets used up, but the price is set by paper contracts and derivatives. The illusion, there's plenty. The reality, global stockpiles are vanishing. Mines can't keep up. Could you comment on that, please?
Yeah, I mean, I think for the last 5 years, there's been a deficit, silver deficit. The point about recycling is that it's silver is still so cheap in relative terms that sometimes it doesn't even pay to get the scrap silver out of old, let's say, electronics and whatnot. So there isn't even that much scrapping as there should be, and the only way to solve that problem would be higher prices, and that's why I think eventually we will see higher prices. They can't keep something suppressed, and how can I say, tinker with the market for so long. Eventually, reality will show its face, and people will demand silver. And you spoke about the public not being interested, but there's a billionaire who I hadn't heard of. He's in like
Right.
a tech billionaire from Utah who bought almost $1 billion of physical silver a month or two ago. So maybe if we get another two or three or four of those people, that might change things.
I'm glad you brought that up. I had not forgotten about it during this discussion, so thank you for that. And Russia, is committed to buying silver, platinum, and palladium. And their purchase, I did it in ounces, and I didn't know how much of platinum palladium they were buying. So I just did a rough guess. They weren't buying any platinum palladium, which is false. But if you use the number that have committed to, at least what's published on the internet, it's about 16 million ounces a year. So it's not like they're cornering the market or whatever, but 16 million ounces is 16 million ounces. I want to digress a bit about the gold silver ratio here because I mentioned platinum palladium. We all know the gold silver ratio on a monetary standard is usually around 15, 16 to 1. We also know that in latter years that the ratio's expanded because most people have been taught that silver is an industrial metal only. I think that's the main message you get from Wall Street or the bankers or anyone. And yet, the argument that the ratio should be, the natural ratio, which in the 1300s was 12 to 1. Now silver's like peak oil. It's not that we're running out, but the easy to get to deposits, the rich deposits are depleted. Even the Silver Institute is implying that we've hit peak silver, and the grades keep going down. So now the ratio is 7 to 1. So it's cut basically in half of what it was, several centuries ago. The point is that platinum is 15 times rarer than gold, and palladium is 14 times rarer than gold. So does that mean that platinum palladium should sell roughly for 15 times the price of gold? The answer is they're not. Should they? I won't say they should. Could they? Perhaps. But I think it's interesting that all the white metals seem to be mispriced relative to gold. And I circle back to my thinking, and that is, like it or not, if you accept the big picture and remain objective, and it's hard for me to be objective in the precious metals, but the bankers love gold. They just don't admit it. I mean, you talk to, Bernanke, well, why do we own gold? Well, it's tradition. He's not going to say it's the monetary hitching post of the universe, as Jim Dines used to refer to it. It's just a tradition. Well, then why do you have so much? Which would be the follow-up question. So again, it goes back to this monometallic standard. He who owns the gold makes the rules. Well, if we, the people, owned all the silver and took it in our back pockets as a metaphor, we bought it physically, we'd have a lot of control, don't you think? So that's kind of a double whammy with my stream of consciousness. Mario, can you reel
Yeah,
that in?
I agree with you. And I mean, I got into gold before I got into silver back in 2002. And the reason I bought some Krugerrands at the time was because of the dot-com bubble and the stock market correction. And my private pension went down in value. And my wife and I sat down and said, well, let's buy a little bit of gold just to diversify. And then a year later, I graduated to silver and started buying some silver. And I do agree with you. The general public wouldn't need to be dependent on the elites and the bankers for their gold or for their loans if we dealt in silver. And as I told you earlier, back in the Middle Ages, yeah, the general public, their money was silver. And someone might say, so why do you have gold? Well, because sometimes you need to, yeah, if you know that gold is going to do well because your enemies have gold, then you might as well do it as well to keep afloat. I think it was Lindsey Williams. I don't know if you heard of him,
Oh,
Pastor
yeah.
Lindsey Williams. He worked on oil exploration in Alaska. He was a chaplain for big multinationals, and he said that gold is there as the elite's money. And like you said, they still hold it in the central banks. Central banks have been buying gold hand over fist for since 2022. Not so much in the West, unfortunately. And I say unfortunately because that means they're going to keep inflating, and gold has acted as a good store value. So has silver, maybe not as much. But even Jim Sinclair, who we spoke about before we came on, he said that yeah, the bullion banks they control, manage the price, if you want to call it, or manipulate the price of gold and silver. But he always said that eventually they'll close their shorts and they're going to go long, and they are going to make well, they're going to benefit more than everyone else. So, but yeah, I love my silver coins. I'll only get rid of them if I have an emergency, but they can also be used for bartering if we have a crisis, some kind of crisis, the banks shut down. I can drive down to a farm not far from here and get eggs and milk with coins. I think if I did it now, they probably look at me. But if there's no cash around and the banks were shut, it would work. I think so. Yeah, that's how I see things.
Yeah, a couple comments on that. I do it now, but you can't do it I do it at farmers markets. So in the springtime here in my town, there's a few farmers markets, and I always like to play with them. I walk up and say, "Hey, can I pay for these fruits with money?" What do you mean? I go, show them some silver, and they go,
Yeah.
I don't know, and I actually, since I've been doing it for years, there's a few that know me, right? Oh, there's that guy, the silver guy, whatever. But Yeah, good points. I wrote about that in the 10 Rules of Silver
Yeah.
Investing, you know.
Sometimes I give, like, we have a window cleaner. He comes every month. I pay him 20 pounds, but sometimes I give him like a silver coin. Or sometimes, yeah, I do that.
Yeah.
Just give it to people, and they say, "Whoa, what's this?"
Yeah.
I say, "Well, that's money. I have,
Yeah.
U.S. constitutional silver, but I also have the UK constitutional silver, well, not constitutional, but pre 1920, because the UK went off silver a lot earlier than the U.S. After World War One, it went from 9 to 5 sterling standard to 50%, and then by 1947 they took all the silver out. So I have a lot of pre 1920 coins, and they're great as well. And I'm sure eventually people will accept it.
Yeah. So a couple more bullet points here. When confidence in fiat cracks or the supply crunch hits, silver will reprice. You're not just buying a commodity, you're front running a system built on paper lies and digital illusions. Silver isn't just an investment, it's a lifeline. So I'd want to go to this chart here, which doesn't seem to want to come up. I brought it up ahead of time and now it's not working for me. There it is. I got this from Matt Watson. Matt Watson, I've talked about on other interviews. Um, he is a precious metals analyst. He does all the metals. I mean, I look at most of the metals, but he gets into everything, like some of the exotics, like iridium, and some of those can't pronounce. But anyway, he did this chart, and this is the low case for silver demand. Can you see it now on my screen?
Yeah.
So what you see here, I'm going to make it a little bit bigger, if I can. So what he's showing here is this black line is basically mining, okay? And parallel to the black line is this red line, which is mining and recycling. So what
Yeah.
he's saying is from today, 2025, out 50 years to 2050, that mining and recycling roughly stays at 1 billion ounces and goes slightly off to the right, meaning it's starting to decay slightly. And I agree with that, all based on all that we know right now, because as I said in the beginning, the grades keep deteriorating overall. And the recycling, as you said, is pretty static. Could that change? Yes, it could. But we don't know. I think that's a valid assumption for all the data we have now. Now, what we're looking at, and again, this is his low case, is I'm not going to name every one of them, but he shows solar in green. And what's interesting here is you notice as we go further out in time, we're actually using less. Now, we have been increasing solar dramatically. You can see it in the graph from 2022, 2023, 24, a huge increase in solar, and it continues to increase for the next few years, which I believe is valid. And then it kind of levels off. Now, the yellow is automotive, and it keeps increasing, but slightly. Brazing alloys, jewelry is pretty much a constant. Silverware is hardly anything. It's about 4%. Consumer electronics, he shows that growing, but not huge. And so now the main point that I'm getting to, and I want your comment here after I finish, is that basically from a few years ago onward, we cannot even meet industrial demand. And the gray or the silver up here is investment demand. And so if you look at maybe like 2030 and you eyeball it from 1 billion to about 1.4 billion, you're talking 400 million ounces deficit in 1 year. Now, right now, we purportedly have had like, I think 230 or 232, I forget the exact number, according to the Silver Institute deficit. But you start getting into 400 million ounces of a deficit in one single year, you got above ground stockpile of silver. Now, I see silver, I mean commercial bars, what the market trades on. The derivative market trades on commercial bars, not on coins, not on 10-ounce bars or kilo bars. It's probably 2, maybe 3 billion ounces. So if it's two, I mean, it would take 5 years of that to, in theory, be out of silver. I'm not saying we're running out of silver. I'm just giving you the math. But what I find, my last comment, I'm going to hand it over to you, is I disagree with Matt on the investment demand. What he's showing is constant every year, 200 million ounces, which is kind of the average over time. But way back here in 2020, he's incorrect. In 2020, this gray bar should be way up here because it was 520 million ounces of investment demand in 2021, rather, bought in 2020. It was 320 million ounces of silver went into the ETFs that year, and 200 million ounces was bought by retail. So that's 520 million ounces. My point is, coming back to it, that I think as the fiat empire starts to crush more and more, that there'll be huge increases in investment demand. So the average 200 million in any given year will be 300, 400, maybe back to 500 million. And the one thing we haven't seen yet, which is rather perplexing, is all this run to gold that I forecast a few years ago. That's happening as I forecasted. But silver, the run of silver hasn't started. In fact, the institutional side really is just kind of sleeping on this whole thing, which is perplexing. So I spewed out a lot there. I don't know if you've seen this before or not, but it's kind of a strong case for silver. Again, he's using low case. The high case used more investment demand and higher use across the board. But what are your thoughts on this?
Yeah, I mean, investment demand is important. Um, and ETFs, though, I would argue if they do affect the supply, physical supply one to one, because we've heard that a lot of ETFs they use different silver hoards. It's used for COMEX, SLV. So yeah, that's what I would say about that. But it just looks very smooth to me. And like you said, if there is a problem with, and I think there will be a problem, I think we're right in the beginnings of fiat currency implosion. You could see the investment demand, real physical and not ETFs, go through the roof, and it would really impact the supply. There wouldn't be that much because right now there's already, like you said, a deficit. And yes, I don't know how long they can keep this going. And silver mining, I mean, there's very few pure silver mining plays, and a lot of it is with copper. And yeah, it takes time as well, as you know, David, to get to explore new ground, and then to make it come out with a study, and then build a mine. So yeah, I think yeah. I mean, and I've been looking at this and other people as well for the last 2, 3 years, that one day silver has to go up, and it's just a matter of time.
Why do you think that there hasn't been much participation on the institutional side of silver? I mean, normally, look, the algorithms do most of the trading these days, and these guys are smart. I mean, they get the signals, they've gotten the signals, and yet you still see, this
Mhm.
almost a bifurcation with the gold silver ratio going over 100. I mean, I'll admit it on public. If you would have said gold was making new highs constantly, what would silver be doing? And you asked me that just a few years back, I would have said, well, gold, silver would participate. You wouldn't
Yeah.
see, in fact, I would have said that from 80 to 1 gold silver ratio, that once gold started making new highs, you would see the gold silver ratio come down, not go up.
Yeah, I agree. 80 is a key level. I wouldn't have thought that with gold at above 3,000, we'd be at 100 to 1. I think on the institutional and the retail side is could be to do with cryptocurrencies and Bitcoin. It's almost like a distraction from real money. And even you look at BlackRock, their Bitcoin ETF. The only institution that I think got into silver, it was a guy from Guggenheim, three or
Yeah,
four.
Scott Maynard. And
Yeah, he
I
passed
would,
away.
yeah, I did. I would, I'll just throw this out there. It's conjecture, totally, speculation, if you will. But that 2021 that I said was 320 million ounces went into the institutional side through the ETFs. I believe, I don't know if all of it, but I'd say the lion's share of it was Scott Maynard. Because at the WEF, known as Davos in those days, when Bloomberg was interviewing him for
Yeah,
his
I
go-to
remember
investment,
that.
he said silver was his go-to investment. And
And
those
it
guys
did.
almost swallowed the microphone. They couldn't believe
Yeah,
he said the word silver, and now he's gone, as you state. So, do you think, putting on a tinfoil hat, that perhaps the word's out to just leave it alone from the institutional side, gold only?
probably. And the other thing maybe is that gold is less bulky as well,
Yeah.
so it's easier to buy. And also because central banks, they're buying gold, they're not buying silver, so that distorts the price as well.
All right. Well, I've covered everything I wanted to. Thank you for your time. I always enjoy your podcast. Let our viewers know. I know you've got a pretty large following on X. I don't know how big it is. It's pretty big, I believe. But where can
Yeah,
people find your work?
yeah. My podcasts or videos come out on YouTube. Every day I post something at Maneco 64, Maneco 64. And on X, I've got about 25,000 followers, and it's Maneco 64, but the handle is at Maneco 1964.
Well, any final words for us? Words of wisdom?
Um, no, well, yes. I think if you do your homework and you study the current, well, it's not even a system, this monetary chaos that we live under, you will realize that you need some silver and gold as well. And I think you need to keep your emotions level. Uh, Early this week, gold has touched 3,500. People are getting excited. I wasn't excited because I know things can change. But over the long term, it's a no-brainer, David, because the bankers, the central banks, the governments, they're going to keep printing because if they don't, uh, everything implodes and they'll be out of a job.
I'm going to not let you off the hook because I listened to your podcast this morning before we started our interview. And that was, I forget who it was, to refresh my memory, about potentially going to a hyperinflationary scenario. Then you mentioned that on your
Yeah.
podcast this morning. Can you go through that a little bit?
Yeah, the guy, I follow him on X. He's a bank, he analyzes banks, and he worked for the New York Fed. Richard Whalen, Whalen, and he did an interview. It's the first time I see him with Daniela Cambone, and that's what he said. The U.S. is going down the road of Argentina, and that when Uncle Sam needs more money, the Fed will keep printing. And he said that America is always overspent and that it doesn't like taxation. So that's why he sees that.
Yeah, I'm glad we're ending there. I've said, and I'll just be consistent, I do not see a true hyperinflation in the US dollar, but I can't rule it out. Certainly that's the trend. I will absolutely agree with that. But one of these many books back here was Silver, the Restless Metal by Professor Jastrom, who wrote The Golden Constant and talked about gold's being a constant. I mean, over time, an ounce of gold buys the same amount of men's clothes or oil or wheat or whatever. It's stable, really. It's, as you know, Dine said, I'll repeat, the monetary hitching post of the universe. It's a constant, something we can rely on. So after Jansen wrote that book, he wanted to look at silver. Silver has a different story. It does well in some environments. It's not consistent, but the main consistency is that if you go into a hyperinflationary environment, there is nothing, and not even anything close, that does as well as silver does. Because, you know, again, it's the masses. I mean, people are going to do whatever they want to. I think there's not only a survival instinct, but a financial survival instinct. And if you look at your bank account being worth one half of what it was, you know, 6 months ago because the inflation rate's so high, you're going to figure out something to do with that fiat. And so maybe we should end there. I'll give you the final word because I'm glad I thought about that this morning. I thought that was very key that this New York Fed guy that's retired had to, you know, said that to Daniela Cambone, because this is something that's my biggest fear. I mean, hyperinflationary depression is the worst outcome that you can have in a fiat system.
Yeah, I actually think we will go into one. So yeah, that's all I will say.
Okay, we'll leave it on that happy note then.
Yeah,
We will visit again sometime. Safe hello to my friends in the UK,
yeah.
and I guess as Arnold said, I'll be back.
Okay.
Thank you, Mark.
You're welcome.